Taxation is process where the government imposes charge on individuals and companies. The revenue collected is used to fund public services such as road, bridge, public transportation, and government operation, including national defense and security. There are two main types of taxes, which are direct taxes and indirect taxes. Direct taxes are imposed directly on individuals or entities, such as income tax and corporate tax. Indirect taxes are included in the price of goods and services and paid by consumers, for example, goods and service tax and custom duty. In Malaysia, a self-assessment system is practiced where taxpayers determine their own tax liability. Several parties are involved in this process, including taxpayer, employers, the Inland Revenue Board of Malaysia, and tax professionals. For company, Form C is used to file corporate tax return and must be submitted within 7 months after the financial year end. Companies need to prepare accurate financial statement, tax computation, and supporting document. For individuals, Form BE is for resident with employment income, Form B for resident with business income, and Form M for non-resident. Each form has its own submission deadline. Failure to submit tax return or pay tax on time may result in penalties range from 200 ringgit to 20,000 ringgit, imprisonment of up to 6 months or both. In conclusion, taxation is essential for national development and taxpayers must comply with tax law and deadline.
Assalamualaikum, my name is Rida and I will explaining the background of Global Equine Services and Business Holdings, also known as GISBH. GISBH is a Malaysian multi-sector business group that operates in many industries such as food and beverages, retail, agriculture, education, logistics, health and services, and more. Over the year, it has grown rapidly and now operates not only in Malaysia but also in more than 20 countries, which include Thailand, Middle Eastern countries, and several European countries. Because of this expansion, GISBH is often seen as a large Islamic-based commercial organization. The origins of GISBH are closely linked to the former Al-Arqam movement, which was banned by the Malaysian government in 1994 due to concerns about its teaching. After the ban, many former members reorganized under new corporate structures. One of these was Rofakat Corporation, which later evolved into what we now know as GISBH. Although GISBH is legally registered, authorities still monitor it closely because of concern that some teachings or practices may still be influenced by Al-Arqam. GISBH manages various types of business under the brand name Equine that include restaurant, bakeries, mini market, and other service-based companies. Their business model is often presented as promoting an Islamic lifestyle through entrepreneurship. It is estimated that they manage assets worth tens of million ringgits and have thousands of employees across their subsidiaries. Besides commercial operations, GISBH has also been involved in running welfare homes and residential facilities, particularly for children and youths. The centre were meant to provide education, shelter, and religious guidance. However, in 2024, these welfare homes become the focus of major investigations after allegations of neglect and abuse surfaced. In September 2024, a large multi-agency police operation known as Operation Global raided several premises linked to GISBH. The authorities rescued hundreds of individuals, including minors, and arrested several individuals believed to be managing these facilities. GISBH denied the wrongdoings, but the operation raised public concern about the organization's internal governance and compliance with Malaysian laws. Lastly, the organization's activities have also attracted attention because religious authorities found materials linked to the Ban al-Arqam movement during enforcement actions. Although GISBH denies promoting divine teachings, this strengthened public suspicion and contributed to ongoing monitoring. In summary, GISBH background is a combination of business growth, religious influence, rapid expansion, and controversy. This background helps us understand why the company is now facing legal, financial, and social issues.
Hi, my name is Aisha Nadira binti An. Let's begin with the legal landscape. In Malaysia, the Income Tax Act 1967 is the primary legislation that dictates how income tax is imposed, assessed, and collected. This act applies to both individuals and businesses. It isn't just a suggestion, it is a mandatory framework where companies must register with the Inland Revenue Board (IRBM) and file annual returns based on their taxable profit. Now, looking at the GISP case, we see a massive breakdown in this framework. Investigation by the Royal Malaysia Police and the IRPM show that despite having the business operation across the multiple sectors, the organisation failed to pay business tax for many years. This isn't a just minor oversight, it is a direct breach of the ITA 1967. The Act classified this failure into two main sections. First, we have Section 113. This applies when a taxpayer submits an incorrect return or leave out income information. The penalty here is quite stiff, up to 200% of the tax when you fail to pay. However, the case gets more serious under the Section 114, which deal with the willful tax evasion. This means a business purposely tries to avoid its duties. If proven, the penalties escalate to 300% of the tax evaded, substantial fines, and imprisonment. Beyond tax, we must talk about the corporate transparency. Under the Companies Act 2016, every company has a legal obligation to prepare and submit audited accounts to the Companies Commission of Malaysia or SSM. Failure to provide this correct record is a criminal violation. Lastly, there is a business zakat. While the ITA 1967 doesn't strictly mandate zakat, it is an essential religious of the social duty for Muslim-owned business in Malaysia. Zakat is usually set at 2.5% of the business profit and the asset once they have held for a full lunar year. While failing to pay zakat is a religious issue that managed by state Islam authorities, it often signals a deeper problem with the governance and ethical transparency within the firm.
Next, I will explain the factual allegations and evidence reported against GISBH. The first allegation regarding non-payment of business zakat. One of the major allegations is that GISBH failed to pay business zakat over many years. In September 2024, Lembaga Zakat Selangor confirmed that they had no record of zakat payments from GISBH or its related companies. This is significant because GISBH operates profitable businesses such as restaurants, retail stores, and service-based activities, which normally generate zakat-eligible income. This finding was based on official internal audits, not rumors. So this allegation is supported by hard evidence. The second allegation is about corporate and financial non-compliance. SSM, which is Suruhanjaya Syarikat Malaysia, also found that many GISBH linked companies failed to submit audited financial statements and annual return as it is required by the Companies Act 2016. Due to these violations, at least 12 companies linked to GISBH were fined 4.4 million ringgit. These penalties are official and publicly documented, meaning they are verified violations, not just accusations. The third allegation is about welfare home mismanagement and abuse. GISBH also faced serious allegations involving their welfare homes, especially those with children. Reports from national and international media stated that residents, including minors, experienced neglect, poor living conditions, and even possible abuse. These claims triggered widespread concern and led to multi-state investigations. Therefore, it's about evidence from Enforcement Operation Global 2024. In September 2024, the Royal Malaysia Police launched a nationwide operation called Operation Global. During this operation, over 400 individuals, including minors, were rescued. Multiple arrests were made. More than 100 bank accounts linked to GISBH were frozen, and documents and evidence were seized from their premises. These enforcement actions show that authorities viewed the allegations seriously. The scale of the operations also confirms that the issue were widespread, not isolated incidents. 5 is combined evidence summary. Altogether, the evidence includes confirmation from Lembaga Zakat Selangor, official penalties issued by SSM, police raids and rescues, seizure of document and freezing of accounts. This shows that the allegations against GISBH are supported by official documentation, not hearsay. Overall, these factual allegations show major issues involving religious obligations, corporate reporting, financial compliance, and welfare governance.
For analysis of violation, I will focus on business zakat, corporate reporting, and welfare facilities. Firstly, violating relating to non-payment of business zakat. Entities that fail to pay business zakat have directly violated zakat obligation under Islamic law. In Selangor, Muslim business owners are required to pay tax to Lembaga Zakat Selangor. Failure to do so is non-compliance with a mandatory religious duty. From the government perspective, the violation also breached Sharia compliance principle, particularly accountability and social responsibility, as zakat funds are meant for public welfare and asnaf beneficiaries. Secondly, violation of corporate and financial reporting requirements. GISB-linked companies failed to submit audited financial statement and annual returns, which violates the Companies Act 2016. This lack of compliance reduced transparency and exposed shareholders and stakeholders to risk. It also reflects weaknesses in corporate governance, internal control, and compliance culture, which can damage the company's reputation. Thirdly, violation related to welfare homes and residential facilities. GISB was also involved in mistreatment, neglect, and abuse within its welfare homes. These actions violate child protection laws, welfare regulation, and human rights standards. The failure to provide proper care, especially to minors, represent a serious legal and ethical breach. To conclude, the violation committed by GISB show multidimensional non-compliance with religious, corporate, financial, and social welfare obligation. This action undermines accountability and ethical leadership. While the financial legal liability will be determined by the court, the impact of this violation on public trust and society is significant. For this part, I will discuss the tax and ethical implication of the GISB case, focusing on tax evasion and the ethical responsibilities of tax professionals. Firstly, the tax implication of the GISB case. Based on the evaluation of GISB tax-related conduct, the action involved are more consistent with tax evasion rather than tax avoidance. Tax avoidance refers to the legal use of tax planning method to reduce tax payable within the framework of the law. In contrast, tax evasion involves deliberate actions to misrepresent a taxpayer financial affairs in order to reduce tax liability. In the GISB case, investigation revealed that the company operate multiple commercial activities across several sectors over many years without submitting proper tax return or paying corporate income tax. These include failure to declare income and the non-submission of statutory tax documents. Such action indicate intentional non-compliance rather than lawful tax planning. Under Section 113 and Section 114 of the Income Tax Act 1967, the deliberate omission of income, submission of incorrect returns, and failure to comply with statutory requirements are considered serious offence. Therefore, GISP conduct clearly falls within the scope of tax evasion, which carries severe legal penalties, including fines and imprisonment. Secondly, ethical implication for accountants and tax professionals. The GISB case also raised serious ethical concern regarding the role of accountants and tax professionals involved in managing the company financial affairs. Tax practitioners are required to uphold professional ethical principles such as integrity, objectivity, professional competence, due care, and independence. Tax professionals play a crucial role in ensuring that the tax system functions properly and fairly. If accountants or tax advisors knowingly prepare inaccurate financial records, fail to disclose taxable income, or assisted in the non-submission of tax return, this action would constitute a serious breach of professional ethics and professional responsibility. Even in situations where management pressure exists, professionals have a duty to provide accurate advice, refuse to participate in unlawful practices, and take appropriate steps to prevent non-compliance. This may include escalating issues to higher authorities or withdrawing from engagement where ethical standards cannot be maintained. In conclusion, the GISB highlights both serious tax violation and ethical failures. It demonstrates how deliberate tax evasion not only undermines the integrity of the tax system but also damages public trust. The case emphasized the importance of ethical judgment, independence, and accountability among tax professionals in preventing financial misconduct. In this part, I will discuss the impact of the GISP fraud case on stakeholders. Corporate fraud does not only affect the company itself but also create serious consequences for all parties connected to the organization. Firstly, the impact on employee. Employees of GISB face job insecurity due to the company financial instability caused by legal actions, fines, and investigation. This may lead to downsizing or retrenchment. Employees may also struggle to secure new employment as they are indirectly associated with the case. In addition, employee morale and trust in leadership decline due to the ethical failures and lack of transparency. A negative working environment may develop, especially when employees were unaware of the misconduct. Reduced profit may also result in lower wages, limited training opportunities, and loss of employment benefits. Secondly, the impact on management and executive. Management and executive face severe legal and professional consequences, including fines, criminal prosecution, and possible imprisonment. Beyond legal penalties, they also face career damage, loss of reputation, and reduced future employability. Other companies may hesitate to hire individuals associated with major fraud cases, regardless of their actual involvement. The third impact is the impact on the shareholders. The tax fraud and corporate misconduct often lead to financial losses and reputational damage, which reduce firm value. Shareholders may withdraw their investment due to declining confidence and poor governance. Additionally, fraud reflects weak internal controls and oversight, increasing business risk. When management prioritizes personal interests over shareholder wealth maximization, agency problems arise, resulting in higher costs and lower returns to shareholders. Fourthly, impact on the government and society. From the government perspective, tax fraud results in loss of public revenue, reducing funds available for infrastructure, education, healthcare, and social welfare. This creates an unfair burden on compliant taxpayers who may be required to cover the shortfall. On a broader level, public trust in corporate responsibility and regulatory enforcement is eroded. Society may perceive the system as unjust when large companies engage in fraud and detection takes a long time. Lastly, impact on customer and supplier. Reputational damage can cause customer to boycott the company, leading to a loss of sale and long-term brand damage. Supplier may also face payment delay or contract termination if the company experiences financial distress, disrupting the supply chain and affecting the other business. In conclusion, the GISB fraud case demonstrates that corporate misconduct has wide-ranging and long-term impacts on multiple stakeholders. It highlights the importance of strong governance, ethical leadership, and effective regulatory oversight to protect stakeholder interests and maintain public confidence.
From the GISB case, several important lessons can be identified. These lessons are mainly related to tax compliance, transparency, ethics, and governance, which are very important for all business organizations. The first lesson is that tax compliance is mandatory for all business, regardless of whether the organization claims religious or social objective. Failure to declare income or pay tax is considered tax evasion, which is illegal. Secondly, transparency in financial reporting is very important. When companies fail to submit audit accounts or hide transactions, it creates suspicion and attracts investigation from authorities. Another important lesson is the ethical responsibility of accountants and tax professionals. They must not assist management in hiding income or submitting false information, even if pressured. In addition, strong corporate governance is essential. Weak governance allows unethical practice to continue for a long time, as seen in the GISB case. Last but not least, education on tax and ethics is crucial. To prevent errors and unethical choice, business owner, manager, expert need to be aware of ethical standard and tax regulation. An organizational culture of integrity and accountability can be fostered through appropriate education. Based on these lessons, several recommendations can be proposed to prevent similar cases in the future. Firstly, organizations must strengthen their tax compliance practice. All income must be declared and tax paid on time. Professional tax advisors should be engaged to ensure compliance with tax laws. Secondly, financial transparency must be improved. Proper records keeping and regular audits help build trust and reduce the risk of investigation. Next, organizations should establish strong corporate governance structure. This includes clear responsibilities for management and effective internal controls. Lastly, companies must promote a strong ethical culture. Accountants and tax professionals must remain independent and refuse unethical practice. Ethics training can help create awareness and prevent misconduct. The company could have reduced its tax liability legally by applying proper and lawful tax planning strategies without violating tax laws. In addition, there are several practical recommendations that business can apply to improve tax compliance while remaining lawful. First, companies should claim allowable business expenses correctly. Expenses such as employee salaries, utilities, rent, marketing costs, and depreciation of fixed assets are deductible under tax laws. However, these claims must be supported by proper records and documentation to ensure they are lawful. Second, business should make use of government tax incentive. This include capital allowance, reinvestment allowance, and incentive for certain industries. By understanding and using this incentive, companies can legally reduce taxable income while supporting business growth. Next, companies must improve transparency and compliance. This can be done by clearly separating different business entities and accurately reporting related party transactions. Transparent reporting reduces the risk of audits, penalties, and legal action. Lastly, business should engage professional tax advisors. Tax advisors help with effective tax planning while ensuring full compliance with tax law. This allows business to achieve tax efficiency legally, avoid penalties, and maintain a good relationship with tax authorities.
Continue with the challenge and the risk of implementation. The first major hurdle is financial. To put it simply, good compliance is expensive. You have to engage the outside auditors, professional accountants, and tax experts. For an institution like GISB, which hasn't used a transparent management scheme, this cost can be high enough to cripple the institution. You also have to buy modern accounting system and train every single day employee on how to use them. The second hurdle is a time and complexity. When you have years of uncompleted or incorrect financial reporting, you can't just start fresh. You have to construct the past to overcome long-standing non-compliance issues. This required careful planning, and audits of past transactions often lead to massive delays. Then we have the human element. Changing the culture of an organization is often harder than changing the software. If a firm has a long focus on avoiding regulation, the staff and even senior management might resist safer control. Without effective leader who can communicate why this change is necessary, the improvement will likely fail. We also have to consider technical risks. If a business is not familiar with digital system, they face a problem with a data migration and user competency that can slow down the entire process. If the internal monitoring remains weak, there is a very real danger that the organization will simply go back to its old, non-compliant behaviors once the heat is off. Even if you start the implementation, several risks can cause it to fail. A major threat is the failure of internal monitoring. Without strong control mechanism, an organization is likely to go back to its old, non-compliant ways. We saw this with GISB. The lack of monitoring gave them a free pass to violate rules for years until the authorities intervened. Top management commitment is another make or break factor. Without strong leadership and sense of direction, enforcement will fail. Additionally, external factors like negative stakeholder response or ongoing police investigation can interfere. When management is forced to focus on crisis management, dealing with the legal accusation and a tarnished image, they often lose sight of long-term structural change. Finally, the legal landscape is always shifting. Regulations change constantly. If an organization cannot keep up with this change, their new policy will not be sustainable in the long run. In summary, the legal framework in Malaysia is clear and the penalties for evasion are severe. However, for a non-compliant entity to reform, it must overcome massive financial, cultural, and technical barriers. It requires more than just a desire to change. It requires a total overhaul of leadership and system integrity. That's all from me. Thank you.